To another, Mahindra & Mahindra reported their numbers a short while ago, a beat on the margins. The management is talking.
In good progress in this business. International markets have moderated, but due to strong execution, margins gone up 100 basis points here, which again in an industry like farm is a pretty tough act, and a lot of kudos to the team to drive that margin expansion. Mahindra Finance, in addition to the asset quality and growth, technology is a key part of our turnaround, and we have 100% of branches now under a central processing system with a much better tech system. A lot of work has been done on technology. We aim to be the best in class in the industry, and we are well on our way. That's the remaining year and a half or so of turnaround that Mahindra Finance will undergo, is largely from a tech standpoint. And here you see almost 500 crores of profit for the quarter for Mahindra Finance. This is a pretty remarkable number. We're at 497 right now, just shy of that 500 crore number. Tech Mahindra, the new organization's focused on service delivery. The demand signals are still mixed. You see good numbers from a previous year comparison standpoint, but again, to be very transparent, previous year was a low point, and therefore we look more at are we on track with the turnaround plan as compared to the numbers of the previous year.
I just wanted to state here that, one of the reasons we've increased capacity is to make sure we bring down customer waiting time. We're already beginning to see that. And this chart was created in an era when customer waiting time was very high. That era, we think, is behind us as we've increased capacities. This is the last time you will see this chart for some time. XUV 700, I just want to take a couple of minutes. Many people had thoughts and questions. So what happened? And why did we do an anniversary offer at this time? We had increased prices on the top two variants between 3.8 lakhs to 4 lakhs. So this was the extent of increase. Commodity prices had gone up a lot in the period since we launched 700. There was escalation and a shortage in chips availability, which had led to increased material costs, and 700 had a lot of chips. We've increased the capacity over since launch. So we started at 3,500. We hit 6,000 capacity. Now we're at 10,000. So there is a need and a desire to start leveraging our capacities. Overall, our costs have come down for two reasons. One is we've, of course, done value engineering. Post-launch of a new product, we spend effort in removing extra costs which may not be adding value to customer. And as I mentioned earlier, we normalized the premiums that were there on chips at one point of time has all gone away. There's no chip shortage now. We don't have to pay any extra market price for that. So that's brought material costs down. We expect this anniversary offer to have minimal impact on financials because we expect higher volumes. We expect the costs have already come down, and we will get operating leverage out of the higher volumes. Our bookings in the month of July have gone up over 40% on 700 compared to the previous month. So we're already seeing very good momentum come out of the actions that we've taken. On the LCV side, the industry continues to be flattish. We've gained market share, so our volumes have grown a little. But hopefully, as we get into the second half, we will start seeing the segment industry grow compared to what we've seen in the last 18 months. Last mile mobility, we continue to be number one. The very interesting thing here now is that in this segment, EV penetration is at 20%. So it's the most penetrated segment with electric vehicles. As we had mentioned earlier, we expect that as new players come in, the penetration will improve, the category will grow faster, and that is exactly what we see happening here. So the auto consolidated revenue grew 16%, and PBIT grew by 45% to absolute number of 1,787 crores. The auto margin, I think, is really the highlight on the auto business for us. We have been talking about margin improvements, and giving some kind of a guidance on the direction. We're very happy that we've got to 9.5% margin. Some of you had in mind, the 3XO launch that was happening in Q1, and what would that do to our margins? And some of you who were at the launch did ask us, how are you ever going to be able to finance these kind of prices that we launched at? Well, 9.5% answers that question.